Hey, the housing market is sending major warning signs that you need to be aware of because home prices are dropping in 11 of the top 50 most populous U.S. metros. And that's the most in 19 months, according to Redfin's latest update. Hey, if you're new to the channel, welcome. My name is Jason Ferrier. I am the housing nerd. And if you want real, unfiltered, unbiased housing market data, you came to the right channel. If you're looking for someone to tell you that you should buy a house, you came to the wrong channel. And if you're looking for somebody to tell you to not buy a home or invest in real estate, you also came to the wrong channel. My job's not to tell you what to do with real estate. My job is to give you the data you need to make the right decision. So let's get started. Now, first, we're going to look at the National Redfin report and their latest article. Then we're going to look at specific metros that you have requested. If you have a metro you want me to analyze, drop it in the comments below. According to the latest Redfin article, they say nationwide home prices are up 2.1% year over year, the slowest growth rate in nearly 2 years. What you're going to see today, folks, you're going to completely be like your jaw is going to be on the floor when you see some of the differences in these housing markets. Some markets have prices down as much as 3.7%. Other markets are up double digits. We're talking 12, 13, 14% increases in sale prices. So two totally different markets depending on where you live. Real estate's local. We're going to start with the national look, then go to metros. And so they say the median home price declined year over year in 11 of the 50 most populous U.S. metro areas during the 4 weeks ending April 20th. The last time home prices dropped in that many metros was over a year and a half ago in September of 2023. Prices declined most in San Antonio, Oakland, and Jacksonville. The other places where it fell were Phoenix, Austin, Texas, Dallas, Orlando, Sacramento, Fort Worth, Portland, and Nashville. Home prices are falling in many major metros and price growth is decelerating nationally because many house hunters are backing off, but the number of homes for sale is holding up. Home tours are slowing, mortgage purchase applications are falling, and Redfin agents in many parts of the country report that would-be buyers are ultra cautious amid high housing costs and widespread economic uncertainty. Pending home sales are down slightly year over year, negative 0.3% or down 0.3%. So comment below. I want to know from you, do you think the national median home sale price will end up lower by the end of this year compared to last year, or will it be higher? And do you think home buying demand will return, or do you think it'll get worse in 2025? Comment below. I want to know. The median U.S. monthly housing payment is $2,848. That's just $8 shy of the all-time high as weekly average mortgage rates jumped to 6.83% from 6.62% in just 1 week. Mortgage rates are rising for the same reason many buyers are backing off: economic instability and increasing chances of a recession, largely stemming from new tariffs. So you tell us, were you thinking about buying a home or selling a home in 2025, maybe even investing in real estate, and then with all this economic instability, you decided, you know what, time's not right, I'm going to stay on the sideline? Many buyers and sellers are thinking just that. Hey, a quick break from today's awesome Redfin update to remind you, subscribe to the Housing Nerd. Hit the like button on this video for me. Only takes a second and it really helps me. Also, comment below. I want to know what you're thinking about the housing market. Okay, back to the Redfin update. Meanwhile, new listings are up 9.6% year over year, and Redfin agents report that much of the activity they're seeing in the market is from sellers. Now, as a local realtor and investor in Central Ohio, I can tell you I am seeing more activity from both buyers and sellers, actually. And Columbus is actually really active when it comes to pending sales and people actually buying homes. All of a sudden, buyers have come out of the woodwork in Columbus and decided now's the right time to buy. I'm also seeing more people list their home for sale right now than I have the last few years. So I'm busy, but other parts of the country aren't like Columbus. There are always people who need to buy or sell homes, no matter what's going on. But with so much uncertainty in the economy, now is a time for those buyers and sellers to be more strategic, said Chen Zhao, Redfin's economic research lead. My advice to sellers is to price your home fairly for the shifting market. You may need to price lower than your initial instinct to sell quickly and avoid giving concessions. On the flip side, buyers should negotiate on price and terms and shop around even more than usual for the best mortgage rates. And I would agree with that. Redfin has actually solid advice here. I'm proud of them. If you are selling a home, price it fairly. Don't try to get greedy. This is not 2021 or 2023 where people could just slap any price on a home they wanted and they got it. This is a real market. Some would say even more of a buyer's market in a lot of areas. So you got to price that thing aggressively. And as a buyer, you can be patient. You can look at homes. You can take your time, more so than usual over the last few years. And you can certainly maybe even make a lower offer. The crazy part is, as an investor, it's actually a great time to buy because there is less competition out there. Now, a lot of homes and multifamily properties in some areas of the U.S. that are sitting on the market a long time, and investors can go in and make a low ball offer, maybe get it accepted. Now we're going to look at the indicators of home buying demand and activity. How busy is the market out there? Well, daily average 30-year fixed mortgage rates are at 6.94%. However, when I look at Mortgage News Daily right now, I can see they're at 6.92% as of this video on Thursday afternoon. So rates have come down slightly. I know the 10-year was down today, so they'll probably drop a little bit more. Honestly, I don't see rates getting into that low 6% range in 2025. You comment below. Tell me what you think. Will rates drop below 6% this year? Mortgage purchase applications are down 7% from a week earlier, and they're up 6% from a year earlier. Now we know that a few weeks ago, interest rates, mortgage rates went through the roof when the tariff pandemonium came out, right? We saw rates start to drop, then rates went through the roof when the tariffs came out, then they started to come down a little bit, but now they really haven't come down to that 6.5% range that we saw a few weeks ago. So I'm not surprised to see mortgage purchase applications down slightly. Touring activity, this surprised me. It's only up 16% from the start of the year. And the start of the year was like frigid cold temperatures, at least here in Ohio. And last year, at this time of year, we were up 35% from the start of the year. So we're definitely lagging behind when it comes to tours and showing requests. Google searches for homes for sale up 6% from a month earlier. That is unchanged from last year. So really the same amount of people looking for homes on Google. Now we look at the US highlights for the 4 weeks ending April 20th, 2025. This is all about the top 400 US metros, what's happening with prices and active listings and that type of thing. But we're going to look instead at the actual data, the raw data from Redfin. So on redfin.com, you can come over to data center. That's what I am doing right now, looking at the actual market data. And we're looking at the weekly data. You can also look at the monthly data below, but for now, we're looking at the weekly data. And so let's start with new listings. New listings of homes for sale only up 9.6% year over year. A lot of people think that's like a flood or an explosion of inventory, but in reality, there's a lot of metros that are down year over year in new listings. And overall, being up 9.6% isn't that great, probably because we've been so low over the last few years as far as inventory goes. So only to be up 9.6% in the number of new listings isn't that fantastic. It's definitely lower than a lot of people had hoped for. Now we're looking at active listings of homes for sale. I expected this to be a lot higher than it actually is right now. And one big warning sign that I'm seeing is this. You can see we're up about 15% year over year, but look at the rate of change. Look at this. We started the year up 19% year over year. Then we steadily went down, and to now we're just at 15%. So the rate of change is dropping year over year. It's not increasing. And folks, this is where the active listings and the new listings is where you're going to see the pain first in the housing market. If you're not seeing new listings suddenly spike, and I don't mean just like 9%, I mean like 50%, like double what you normally see in a market, then there probably isn't a lot of seller pain there. Meaning you have a lot of sellers that want to sell. They don't need to sell right now. And that's a big difference, a massive difference, because if I just want to sell my home, I'll put it on the market at a price I want. And if somebody doesn't buy it, I'll take it off the market. Versus I need to sell. When you need to sell a home, you price it to move. You show it everywhere. You don't hide it. It's not shadow inventory. It's not ghost inventory. It's not pretend inventory. It is on the market everywhere to be seen. People would drop flyers from an airplane if they had to. They need to sell their home because they're in distress. Not seeing that yet. However, what we are seeing is more buyers start to return to the market. I mean, we are down in pending sales year over year, but it's basically flat. I mean, it's almost 0% year over year growth, but we've been low with pending sales. But if you look at the rate of change for pending sales, you can easily see that we've gone in an upward trajectory, albeit a slow trajectory. My point is there are buyers out there actually buying houses. There's not a ton of them though. But make no mistake, there are people buying homes. And when we review the metro data, city by city, that you guys have requested in a minute, you're going to see what I'm talking about. Now look at median sale price. A lot of people look at this metric and say, well, the books are cooked. It's not right. Redfin's lying. I don't believe that. Maybe you do. Comment and tell me if you believe Redfin is lying. But home prices right now are up about 2.1%, call it 2% year over year. Not a big spread. In fact, if you look at the rate of change for home prices, for the median home price, you can see it's dropping, right? The rate of change is dropping. So the gap between last year and this year is getting smaller. Eventually, we're going to see this line cross 2024 and be lower than last year. It could happen this year. I think it probably will. So that was the national look, but let's get into some metros to find out what's happening in maybe your neck of the woods. We're going to start in Ohio. I get a lot of requests for Ohio because that's where I work. And so new listings in Columbus, Ohio, they're up a lot. We're up 11.4%. That's good. We need more new listings everywhere in the US, basically, even in Columbus. And now we look at active inventory. That's up too, 20% year over year. So more homes to choose from. So in Columbus, we have more inventory, which is good. However, look at this, pending sales up 16.4% year over year. Man, a lot more people buying homes in CBUS this year compared to last year. As a realtor, I can tell you, I'm busy. And look at median sale price. Now $340,000, up under 1%. Basically, it's flat, but make no mistake, prices are not coming down in central Ohio overall. Next up is Cleveland, Believeland, Ohio, with new listings up 17% year over year. And so we have more new listings in Columbus, more new listings in Cleveland. That's all good stuff. Gotta have more new listings. Let's look at active listings in Cleveland. See how we're doing. Active listings only up 7%. Cleveland has been struggling now for the last few years when it comes to home inventory for sale. It just isn't great at all. And like Columbus, we've got some more pending sales in Cleveland, up 4.7% year over year. What about median sale price? That's up about 10%. Home prices continue to go up and up here in the Buckeye State. Now we're going to look at Cincinnati, Ohio. New listings up 10%. So more listings hitting the street. Again, we need to see that. Active listings in Cincinnati up 17%. So again, just like Columbus, kind of like Cleveland, you've got more homes to choose from if you're a buyer in Ohio. And just like Columbus, your pending sales are up. I guess like Cleveland too, they were up 7%. Columbus was up 16%, or was it 17%? It was up a lot. And now pending sales in Cincinnati up 12%. So all three major metros in Ohio are kicking butt and taking names. We're going to stay in that general area and get Detroit, the Motor City, Detroit, Michigan. New listings up 8.5%. Very similar to what we're seeing in Ohio. However, look at active inventory, down 2%. The market is nuts. There are areas like Detroit where you're down year over year in active listings. And then in Columbus, you're up a lot in active listings. Pending sales up 1.9% in Detroit, Michigan. So you've got more pending sales, more people buying homes versus last year, more new listings, but unfortunately lower active inventory. So buyers probably aren't catching a lot of breaks. So look at this. Median sale price in Detroit, Michigan, up just barely 1%, but it's $187,000. It's a 4-year high for this time of year and doesn't show a sign that it's crashing anytime soon. And remember, if you want me to review a metro where you live or where you want to buy or invest, put it in the comments below and I'll get to it on a future Redfin update. I had a viewer request this area, Jackson County, Missouri. Now they requested Kansas City, Missouri, but in Redfin, you can come over and look at the county level too. For some reason, Kansas City, Missouri is not in the Redfin data from a metro standpoint, so I had to use the county level data. So new listings in Jackson County, Missouri, 275 units, down 2% year over year. So not up like Columbus, Detroit, Cleveland, Cincinnati. You're actually seeing lower new listings. So you're actually seeing fewer new listings versus last year. Active listings in Jackson County, Missouri, or Kansas City, Missouri, however you want to say it, down 6.5%. So they have fewer new listings and fewer active listings. Nuts. Pending sales down 6.3%. Man, no one's buying, no one's selling. People are just locked down, not doing anything in the housing market from what I can see from the data in Kansas City. Median sale price down basically 2.6%, call it 3% year over year. So here's a spot where prices are actually down year over year, but in 2024, there was a massive spike this time of year. So I wouldn't read too much into it yet. Fact is, you just don't have enough inventory to cause any type of catastrophic crash. Mecklenburg County, North Carolina, again, had to use the county level because they don't have Charlotte in there either for some reason. So new listings are up 16% in Mecklenburg County, North Carolina. Look at active listings in Mecklenburg. Holy cow, up 30% year over year. They got a lot more homes to choose from there, no doubt. And the rate of change is definitely going up as well. So that tells you, hey, this is probably a trend we're going to continue to see there. Pending sales, how are they doing? Up 6% year over year. And look at the median sale price. Holy Toledo, up 7.5% year over year. Prices there are just going straight up, it looks like. How's the rate of change? The rate of change is going up a lot too. Look at this. I mean, you were only up 1% back in February year over year in prices. Then you were up 8.65%. Now it looks like you're kind of starting to level off, 7.5% higher than last year. Prices there continue to go up. Next up is Tampa Bay, Florida, up 9.4% year over year with new listings. So you are adding new listings. I'm not surprised because that's an area of the country where I would think inventory is going to continue to skyrocket. Active listings up 20% year over year. How's the rate of change? That rate of change, though, is starting to head down, like steadily head down from the beginning of the year. So that spread between last year and this year is starting to shrink. That tells me inventory may start to actually level off coming up. So pending sales down 7.1% in Tampa tells me people are not wanting to buy homes right now down there. They probably can sense that there's more inventory on the street, although we're seeing active inventory looks like the rate of change is leveling off and going down. So will we see that as we move forward, more active inventory, fewer buyers in Tampa? Maybe. Let's look at the median sale price. How's that doing? Well, median sale price is up 1% year over year, but it doesn't look like the median sale price is headed straight down. It doesn't look like it's crashing. I mean, you can see they started down at 3.4% year over year, way back in early January or mid-January, and now they're actually up 0.64% year over year. So home prices have not crashed in Tampa. Let's stay in Florida because that's supposed to be a crash central. Well, up 5% in new listings in Orlando, Florida. It doesn't really look that impressive. Like I'm not seeing the line go straight up, because if you saw, the line going straight up, you'd assume there's a bunch of people that need to sell, not want to sell. Right now, it looks like a lot of want to sell in Orlando. And look at active inventory, up 30%, but now it's starting to head down, and the rate of change is headed down as well. So it seems like active inventory there is maybe even softening. I mean, even with pending sales, look at this, pending sales in Orlando down 5%. You still have active inventory that's starting to decline, not increase. So anyone's guess as far as what happens in Orlando and the rest of Florida. But again, I assume there would be a lot more pain in Orlando. And the median sale price, basically flat year over year, $405,000, but it's been going steadily up this spring, and it doesn't seem like it's crashing. But if you're from Florida, you tell me. I don't live there. I guess I could ask Nick with Reventure Consulting, because I think he lives in Florida, but we all know what he would say. Everything's crashing. We're all doomed. And comment below, do you watch Nick's channel, Reventure Consulting? If you do, I'd love to know what you think about the channel. You think he's spot on, or do you think he's just a hopeful doomer? Now let's head to Jacksonville, Florida. Again, we'll stick in Florida for a couple minutes more and look at this metro because they're up 3.7% in new listings. Again, like some other metros I'm seeing in Florida, I'm not seeing a huge spike in new listings. It's nothing that looks extraordinary as far as new listing growth. What about active listings in Jacksonville, Florida? Up 17, call it 18% year over year. Again, not that impressive. And look at the rate of change. I mean, you got to pay attention to this stuff, folks. Look at this. Started out at 28% year over year when people just threw their house on the market at the beginning of the year, and then steadily dropped with active inventory. So the rate of change is shrinking, not growing. I would think, given Florida is going to have all this pain, you would see that spread growing significantly. Pending sales in Jacksonville, Florida, down 2.4%. Again, not a lot of buyers. It doesn't seem like a ton of sellers on the market, but there must be enough buyers out there to gobble up the inventory, at least some of the inventory that's hitting the market. Otherwise, you'd see active listings going way up. Median sale price down 2.1% year over year, but it doesn't look like it's crashing. I mean, look at the rate of change. The rate of change has been going down, right? Because home prices were dropping compared to last year, but it's starting to go up just when you can see that median sale price start to go up. Next, we're doing Atlanta, Georgia. Somebody asked me for this metro. New listings only up 2.7% year over year. Again, this is where you're going to see the pain. Somebody needs to sell their home because they're in a financial bind. They're going to list their home for sale on the market, and they're going to hit every website, the MLS. They're going to do anything they can to sell that home if they really need to. Right now, it doesn't look like a lot of people in Atlanta need to sell. Active inventory, 20% up year over year. Doesn't surprise me. There's probably a lot of homes on the market that are unaffordable there, and just, normal people can't afford, or they're overpriced. However, there's not a lot of new inventory. It doesn't look like hitting the street. Yeah, look at pending sales, down 7.8%. I mean, it's astonishing that pending sales are down that much in Atlanta, but inventory is not way up compared to where it was over the last few years, because new listings aren't that high. There's just not a lot of people listing homes, not a lot of people buying homes. I mean, look at the median sale price. Continues to go up. It actually dropped at the beginning of 2025, but then has gone up. Now, 4-year high in Atlanta, Georgia, $398,000. Doesn't look like it's crashing, folks. And just a quick word on investors. A lot of people think that all this inventory is going to flood the market from investors. It certainly may. But when you look at a place like Atlanta, unless these investors out there are selling to other investors off market, they must not need to sell their investment properties. Otherwise, you would see it in the new listings. You would see them not just a couple percentage points up. You would see it like 10, 20, 30, 40% higher than last year if there was real distress, right? Unless there's not real distress yet. All right, back out to the Great Plains, to Oklahoma City, Oklahoma. New listings down 0.9% year over year. That's right, down, not more than last year. Fewer homes hitting the market. What about active listings? Up 18%, but that looks like it's holding steady, but the rate of change is headed down. So that spread from year over year is definitely headed south for active listings in Oklahoma City, Oklahoma. Is there another Oklahoma City? I don't think there is. But anyway, I always say Oklahoma City, Oklahoma. Yeah, look at pending sales, down 6% year over year. So there aren't a lot of people listing homes, not a lot of people buying homes in Oklahoma City. Median sale price there, $270,000, up 3.6% year over year. Shows no signs of crashing because it's not, there's no trajectory downwards. You can see the rate of change is up this way, right? Started down here with the rate of change. They were actually down 3.74% at the beginning of the year, year over year in median sale price. Now up 3.62% year over year. Oakland, California, new listings up 0.4% year over year. Just no growth of new listings. That's going to hurt active inventory. But look at active listings in Oakland, up 45.59%. Oh my goodness, tons of homes for sale compared to last year. But when you look at the actual number, you've got 3,200 homes last year and 4,500 this year. So call it another, 1,300 homes. It's not like there's 10,000 more homes for sale. Look at pending sales in Oakland, down 2.8%. So you have a lot of active listings right now in Oakland, but there's not a lot of new listings hitting the street compared to last year. And buying demand, pending sales are still down. So, I mean, I would look at all this and say, there's not a lot of people buying homes. There's a few, and there are a few people listing homes, but there must be a lot of homes that are on the market and just sitting there with sellers that want to sell, not need to sell. I mean, the median sale price is down 3.4% year over year, but it's gone up since the beginning of the year. I mean, you started at 817 grand. Now you're at $987,000. So there's just not a lot of transactions. It looks like that's going to keep that median sale price high, probably. All the way out to Boston, Massachusetts. New listings up 20% year over year. That's great, but it's only 1,200 units, which isn't a lot for a city like Boston. Active listings in Boston, how are they doing? Up 17% year over year. It's a 4-year high in Boston. Eventually, Boston had to have some more inventory. They've been in the toilet so long with the number of homes for sale. It's good to see some more inventory on the street. Look at pending sales, up 14%. This is exactly what I think will occur as we move forward in the year in markets where you're seeing more new listings. A lot of those markets will see more pending sales because, believe it or not, there are people buying homes. That doesn't mean you should buy a home if you're looking, but there are people buying homes, and to pretend there's not is crazy because pending sales in Boston up 14% year over year. Look at the median sale price in Boston, $749,000. And I was afraid that I would see more of this as we head to spring, through spring and into summer, more listings on the street and actual higher prices, not lower prices, because while there are 11 metros out of the top 50 that are down year over year in sale price, there's a lot of metros like Boston that are up a lot in sale price. It's already unaffordable in Boston, and now it's getting higher at $749,000 for the medium priced home. Just nuts. All right, Pittsburgh, PA, the Steel City, up 13% in new listings year over year. Active listings in Pittsburgh only up 3.23% year over year. Hardly any more inventory than what they had last year. Again, if you've got a lot of new listings hitting the street, but your active listing count is not growing, that would tell me that there are people buying homes. Let's find out if that's true. Yeah, look at that. You got 1.5% more pending sales. Nationally, we're actually still down year over year in pending sales, but Pittsburgh up year over year in pending sales. So there are people out there buying homes in the Steel City. And look at median sale price, $239,000. That's up 5% year over year. So you tell me, if there was a lot of pain in a city like Pittsburgh, wouldn't you think you would see prices come down if sellers had to fire sale their properties or investors had to unload their Airbnbs? Wouldn't you see that? Just not seeing it. In fact, let's look at some Airbnb cities before we wrap up, because I'm really curious what's happening there. And when I say Airbnb cities, I mean cities that notoriously have banned Airbnb sales. Let's start with Dallas. New listings in Dallas up 14% year over year. Maybe some people actually are selling their Airbnbs there. I don't know. Comment below. Let me know what you think about that. Are you seeing more Airbnbs hit the market? Like verified Airbnbs, not from AirDNA. That doesn't count. Active listings of homes for sale in Dallas up 30% year over year. That's great. Unfortunately for Dallas, you're seeing that trajectory is going down. The rate of change is heading lower, not higher. So maybe they all listed them already. I don't know. Look at pending sales in Dallas. Pending sales now down 1.3%. So we are seeing more new listings. You do have more active listings, although that rate of change is headed down. Let's look at median sale price and see where we are. Median sale price actually down. What's that? Down 1%, a whopping 1% year over year, but it's headed up since the beginning of the year. In Dallas, you started at $402,000. Excuse me. In Dallas, you started at $417,000. Now $423,000. So year to date, not down, it's up in the median sale price. Let's look at another Airbnb hotspot. Let's do county. Let's do Harris County, Texas. See what's happening there. New listings in Harris County, Texas, up 13%. I think they have an Airbnb ban, if I remember right, from Real Estate Mindset, but I'm not seeing a ton of new listings. I mean, it's actually starting to head down now. Like, it's a 4-year high, but you would think this would explode. Like, if there were 10,000 plus Airbnb owners that needed to sell there, you'd think this number would be a lot higher. It's just not. Active inventory in Harris County, Texas, up 21%. What's the rate of change doing? Oh no, rate of change heading down. You started out up 26% for active listings, being excited. However, now you're down to 21%, and that number is headed down. So looks like that rate of change, you can see it. New listings or active listings starting to head down, rate of change starting to head down. Not good. Not good at all. Median sale price, what's that doing? Down 1% in Harris County, Texas. So not that impressive, actually. Like, I expected a lot more pain in this market. I'm just not seeing it yet. So we saw a lot of markets today. We looked at the national picture. We looked at a lot of metros today. So one of the questions I keep getting is, hey, Jason, do you think home prices will finally fall nationally in 2025? Well, it's hard to predict, but Zillow just came out with their latest forecast, and they had some pretty shocking things to say about this year's housing market and as we head into 2026. You should check out my latest video on that Zillow forecast, and you can find it right here, up here, over here. It's right here. It's somewhere up here, but just click on it.